Good morning, everybody. Welcome to the Flow Show on what day is it today? Lost count. Thursday. What a morning we've got, or what an evening we've got for those of you from different places. Bit of a mess to walk into this morning, so we'll just have a little look around and see what's going on. Not anything majorly happening in the news and events. Fed's Bullard was out last night, pretty much knocking back 75 pip rate in his eyes. Pretty much following what we're hearing from a lot of Fed members, as we mentioned yesterday. It seems just like the bar for rate hikes is just coming a little bit lower than what perhaps the market expects. But as we saw from the CPI data yesterday, the market is in two minds whether to believe that or not. CPI didn't drop as much as was expected, and we got a little bit of a fast move in yields, jumping, so the market's not ready, or the people who are calling for peak inflation, perhaps not yet. It's not yet their time, and the market made them pay for that initially.
Hey, Ryan, I'm here too. Good morning, everybody.
Yeah, hi mate, you right?
Yeah, good. I just wanted to say one thing, if I may say so. I was having a chat with a friend of mine. He says, what do you think is going to happen? What's the Fed going to do? I said, look, I think the Fed is going, if provided that markets keep going lower, I think they're going to be faced with a dilemma. They're going to either have to say, okay, this is it with our hikes and we're reversing course, or they're going to have to watch the economy contract quite significantly. So I think what they're going to do is they're going to choose to make a 180-degree turn. And I think the argument they're going to give to the people is that you're going to have to live, unfortunately, with high inflation for a bit longer, but at least you're going to have a job. So basically, you either the deal is going to be you either pay a little bit more for stuff, or you don't have money to pay for anything. That's my view, and that's why I think maybe 10-15% lower than here, or 20% lower than here in equities, like S&P for 3,500. I think they come in and they save the markets. That's my view.
Yeah, no, I agree with some of that. I mean, I think, as I say, the Fed already starting to lower the bar.
I'm here too, Ryan. Can I interrupt you too?
Hey, full of interruptions today.
I'm gonna have to get a light. You have to put a light on. Put your hand up. Go on. Go on, mate.
No, go ahead. I was just joking.
No, go.
No, I have nothing to say. I was just joking.
You were just interrupted.
For the sake of interrupting. Good.
Yeah. This is what I have to put with, folks, every day. These two.
I learned from the Greeks.
It's like Laurel and Hardy. I'll tell you what. As I was saying, I think the Fed are already starting to lower the bar on where rates are going. We keep banging on about this neutral rate, and that is potentially when the Fed is going to pause and then look at where things are and then decide, are they going to halt for a long while? Are they going to need to continue hiking? Or, like you say, is the economy going to go so negative on rate hikes that they have to look at cutting? But yeah, when you've got, Fed's Bullard was one of the most hawkish, and now he's taking 75 pips off the table. It's a communication wash about expectations now, and that's just bringing the market down. But then, as I say, we got the CPI, and it was as if 75 pips were back on the table. Yield running well up above 3% in tens, and all the dollar yen running up, dollar running strong against everything else. And then it all reversed, and I'll talk a bit more about that in a moment. But just going back to some of the other news quickly, UK GDP was out for Q1, the first reading. Maybe a few people were looking for this to be a complete washout, but it wasn't really. On the quarter, it was down 0.8%. Came in at plus 0.8% versus 1% expected, and the last quarter was 1.3%. A lot of the press were looking at the March GDP numbers because they were down. As I said yesterday, the sentiment is all doom and gloom about what growth might do. So the press are jumping all over the negative number there. It was down 0.1%, hardly a collapse. And then we had some of the other data, industrial production, manufacturing production. On the month, coming in a touch lower and missing expectations year on year, but still up. And it's what I was saying yesterday. You know, perhaps the market is looking for a bit more doom and gloom that there actually is. You know, economies aren't collapsing. The UK economy isn't collapsing, despite what some of the press may say is coming. But obviously, something we need to keep an eye on. Brexit, that's in the headlines again today. We've just had some comments out from the meeting between UK's Truss and EU Sefcovic about the protocol. It still looks a stalemate. The EU doesn't look like it's going to budge at all in these talks. And that's put the ball in Boris's court over what they're going to do with the Northern Ireland Protocol. So I think we're pretty close now to Boris having to make a decision. Is he going to throw something in last minute to negotiations to try and break the deadlock? Or is he just going to, ignore the pieces of the protocol and start putting in policies to go their own way and go against the protocol, which is then going to lead to a response from the EU, and we need to know what that response is. Is it going to be sanctions, or is it just going to be a lot of waffle about going to court and challenging everything in court? Still, it's all a weight around the pound's neck, and we need to keep an eye on that. Now, another thing we've got obviously going on is these moves in cryptos. I'm not a big crypto fan, just to sit my stall out. I think we're in give you the long and short of it. I think we're in the middle of a mania. A bit like the dot-com boom. Been talking about it on Face. I think the whole crypto area, crypto space needs a flush out, and then the cream will rise to the top. Whether we're there yet or starting to see the bubble burst now, I don't know. We obviously seen some big moves in cryptos. Stell's mate, Michael Saylor, he's been putting his house on everything, and he's getting creamed. So
he's well below his average entry, and he's
well below his average. So
his margin call is 21K. Very public about it. I don't know why he does that, but he's very public about it. Actually, I think he has to, right? With the
yeah, probably.
Yeah, he has to. Yeah, you're right. Actually,
for disclosure purposes and whatnot.
Yep.
So yeah, we've seen a washout there, and potentially that's feeding into other assets and into this negative risk-off move, because if you've got a market that's getting spanked on one side, money moves from there into safety or more stable assets, if you like to call them that. As I said, there's probably a lot of margin calls going on, a lot of people getting hurt, and when they get hurt, they're forced out. So again, that's all feeding into this negativity that we're seeing today. And I actually, sometimes I do this little exercise, and I did it in the room today. I just like to put things down in black and white for my own self, just my thoughts. And I put that in the room, just looking at what's eating up markets now, because I'm very much a sentiment-based trader. When I watch the market day to day, I like to know what's happening. I'm not going to know everything that's happening, obviously, but I like to sort of be in tune with what the market's thinking, what the market's doing, because then it gives me my bias. And at the moment, I've listed the negatives there. The negatives seem to be far more than the positives. And in market moves, we're seeing the market move a lot more on negative reasons than we are on positive reasons. So it just tells me really that the market isn't in a good place right now. And if that's the way the market's feeling, I've got to look at my trading, where I'm positioned, what I'm positioned for. And based on that, today I got out of pretty much all my US dollar longs. My US dollar shorts. I was long Aussie dollar, as I mentioned before, playing the RBA. Here we are in a situation where we've got central banks looking to hike, and the currency's not moving in the direction it ought to. The RBA heading to hikes as early as next month, I think, or potentially, I'm not sure if they've got a meeting this month. But Aussie dollar's done nothing but fall. And I've been long. I could have got out yesterday over the CPI, but I was a bit stubborn. The old don't want to fold a trade in. I want to see if it can get back some of the losses that the position was in. But That's why I set my stop at 68.80, purely because if I'm going to be stubborn in my own mind in trading it manually, at least I've got my line in the sand, and if the stop gets hit, it does the job for me. So I was stopped out of that. And then when we got the morning moves, euro collapsing through 105, I just scrambled to close those manually. I was long on average about 105, 10, 15-ish. And I scrambled I closed all those out from sort of 76 down to I think about 65, just because I wanted out. Same with the dollar CAD shorts. Again, been playing some levels there yesterday, and I decided just to fold it. Sometimes I just look at things and think I'm not interested. I don't know what's going on. I don't understand the market moves. I don't agree with the market moves, but they're going against me, or they can potentially go against me. I'm just going to cut out a trade, sit back, and wait to see what happens when the dust settles. So as I say, there's some notes that I put in. It helps me understand where I am, where the market's at potentially. Then it gives me a basis to move on. So just looking at some of the moves, as we were saying, we've seen the collapse in yields. Yesterday over the CPI, as I say, we saw that jump up on the numbers, which was quite surprising. I was expecting to see maybe some fairly volatile algo moves, if you like, if the numbers were off of what was expected. I don't think they were too far off. They weren't huge misses at all. But as I say, the market was expecting a deeper fall. They didn't get the deeper fall. So then suddenly everyone's scrabbling around to reprice the Fed again, because they think, maybe the Fed will be a bit more hawkish and rates may have to go a bit higher. When we talk about clarity markets, for me, that was as clear as day a fade as you could get. I said so in the face literally 2 minutes before the data came out. I was going to add to my euro longs at down around 105.10. If it went down there, and then as everything popped higher, dollar CAD popped higher, back up to this area here, 130, sort of 25, 30. I think got up to about 40s. I added to my short there. For me, it was just a no-brainer at that time. And what do we see? Half hour, 45 minutes later, everything reversed. Everything came back down again. I had a TP in already before the number in dollar CAD, down at 129.20. We got down there. I managed to do it manually at 129.24 to shave off a bit of the position. But it's bounced all the way back up again. And as I say, this morning, I got out the rest of it up to 130.33. The average was 130.15. So, not going to lose any sleep over 18 odd pips. But this is what we're seeing now. We've got this big reversal in the dollar CAD as well, and that's even with oil rising. So, as I say, it's a bit of a mess today. What's going on? I don't really understand what's going on. Some of the themes that I expect to play out aren't playing out. As I say, looking at euro dollar, what the trade I was in here trying to hold some. The same reason that I'm in some for euro sterling is just to play the central bank divergence, the ECB turning more hawkish. And here we have yesterday pretty much every ECB member nailing July as the date for action, potentially when the end of QE, and even possibly rates will rise. And are we seeing a positive reaction in the euro? We're seeing the opposite. So when I'm in a position for a particular reason, and those reasons aren't playing off, I've got to look at my position. So I cut my 105s here, as I say, 70s through to 60s. I'm happy to sit back and see what happens now. I did think about some sell stops, but to be honest, I didn't really get the time to get anything in today amid all the volatility. So yeah, right from here at the moment, as I say, I don't know what's going on. We've got dollar yen following yields. We'll look at that one. And a point I made in the room today is you've got to take it in context. This is obviously a fairly big move. We were at 130.80 yesterday over CPI. now we're, you know, over 200, been over 200 pips lower. That's a big move in this pair at any time of the day, any normal time. But we are in a period of volatility. There's high volatility in this pair. There has been, you know, for a couple of months now, and so we have to look at these moves in their context. You know, this is a big move here. You know, it's at the moment it's one of the biggest negative daily candles we've had for quite some time. But look at it in the context of the overall move. You know, we're not even close to the 38.2 fib of this move. So that just shows you the scale, and it's important to take that context when matching the intraday moves against what's happening in the wider picture. Because you look at that chart there and it looks nothing more than a blip at the moment. But as I say, it's easy to get sucked into the intraday noise, the volatility, and you think, oh, the world's collapsing, dollar yen's collapsing. You know, why is it shit in the bed, if you like? But in the wider picture, it's not really. You know, we're getting down to some levels. We watch the levels. We're getting into that period around, you know, when we hit the 129s and then stabilized. So this is going to be the traffic area for what happens here. If we blast through down here, get under that sort of 127 area, then we're looking at something different. But if we hold around here, find a bit of a support, find a bit of a bottom maybe, then that keeps the range in play possibly, and we'll see what happens. And then we watch to see, are we going to start getting some highs again, or are we just going to start seeing some lower lows developing as the market moves on? Now, one other bit of interest I want to show you is Hong Kong's monetary authority, the HKMA, came in and intervened yesterday. Let's get that up. Last night, just call that as they started intervening. Now, for those who may not know, they've got a band in play here, which they protect very strongly, as you can see there. So their band is 7.75 to 7.85, and they are not shy, as I say, in defending that. Now, when we were back a while back, we were down at that 775, and we had Carl Bass taking some positions to. His view was that they were going to knock out. He was going to knock out the peg, or the peg would be forced to get thrown in. So he was positioned for that. He lost on that. I think it was something like near on 30 million. There was a whole other performance going on there because it was done with money from Steve Bannon, you know, Trump's old mate. And there was a whole hoo-ha of that with the SEC and everything. So that was what was happening down there, and a few of us were trading it down there. I know Kay was trading a just in case trade if it did break. But here we are up at the other end, and I've taken a short at 7.8496, 4 pips off the band. I did worry that what the swap was, but looking around, the swap seems to be 0. So on that basis, it looks a potentially low risk trade to maybe sit in a short up here, see what happens. You know, we're not necessarily talking the SMB here in terms of they may let the band go. This has been something that's been in play for a long time. Never say never, of course. So I've got to stop at 7.86, which, touch wood, I hope will be well out the way. But yeah, just a little bit of interest there in that trade in the top of a band. You got potentially the central bank as your backstop. So it's a pretty low risk trade to look at there. Just looking around some of the other pairs, we've had a breakup, or we did have a breakup in euro sterling. As you know, I've been banging on about this 86 level, the 38.2 fib here. We've got to move above. I very nearly bought the retest of 86 after it hit that sort of 86, 18, 20 area, just to try a break play to see if the break was confirmed. But I held off. My caution got the better of me. I held off, and as we can see, it's come back down 85.62. So not really confident in the break move at the moment. We need to see where support is coming in. You know, we had a bit of a prior highs around here. We haven't managed to hold those either over the last couple of days. You know, we've got some minor levels down towards 2030 down here, 85, 2030. My marker is still down here, this sort of 85 down to sort of 85, 80. And then we've got some other minor levels, 70, 60. So, you know, we've had a break of a level, but it looks like a fake out. I'm not ready to add to my longs yet because I'm still not sure. I'm still cautious over these moves. They're not looking real as of yet. So from the fundamental perspective, and my trade here is trading against the divergence between the ECB and the Bank of England. Not ready to go yet. So I'm not looking to do anything more at the moment. Maybe if we get a real move down towards that 85 handle, I'll have a look to try and add to the position and maybe a short-term trade. So that's pretty much what's going on today. We've got zero data out. Let me double check as far as I can see from the US. Oh no, we've got PPI, sorry. PPI for April, so again, a bit more to the inflation picture. I'm not sure it's going to add too much onto what we've already seen from the CPI. But keep an eye if we do see a big variation there in the data. We might get a similar reaction to yesterday's CPI, but perhaps not as big because the market got burnt doing that yesterday. Overall, as I say, the sentiment really today is a bit negative, but it's not wholesale. You know, as I say, oil's holding up pretty well, considering that if we are looking at global growth worries again, it's you know, it's not collapsing. We're holding above that 100 mark, but also dollar CAD is once again seemingly off the oil wagon. It's not following. You know, you'd expect if oil's pushing higher. The last few days we've seen CAD gain, and now it's you know, sort of doing the opposite again. So we're not really, it's on and off the bus. The dollar seems to be going out on its own. Obviously we've seen collapses in generally in the yen crosses. They've helped bring the majors down. So pairs like euro yen has been a big driver, mainly behind euro dollar falling. But then, you know, we've had that big line in the sand for euro dollar, as I've been pointing out, 105. And when these levels break, you know, they can break big, as I've been mentioning before. Unfortunately, I'm not on the short to profit from that, but this is what you can get, a big collapse. And if a level's tested often, too many times, too many knocks on the door, as I say, then at some point the door's going to smash open and everyone falls through. Just a comment there from, if I hope I get your name right, Magwanya or Timothy. I'll call you Timothy, that's easier. I hope I've said your name right anyway. Looking at gold, and maybe I'll bring Stel in to talk about silver, because he's been obviously the big one for that. It's holding up pretty well, really, compared
I
to...
can talk about it.
Yeah, or you can talk about it, yeah. But gold's holding up fairly well at the moment, which might be surprising for some. But I think we've potentially got a bit of this, maybe something from the crypto space, and this risk move where we've got the opposing forces who want to maybe buy gold on risk is facing sales from people switching assets. So maybe that's a bit balanced. But as you've seen with silver, that's a CFD on silver. You know, that's still edging lower. So I'll go on, K-Man. I'll bring you in for that one.
Yeah, sure, no problem. But even on gold, that's exactly what I said this morning on the chat as well. I think we see some of this rebalancing, reweighting between crypto and gold. We've seen serious legs in the past as well on the opposite side, which is one of the reasons why gold underperformed when inflation was shooting up. And now we see a bit of the opposite side. So 1828.36 is my support zone on gold. If it would break below 1820, it looks really bad news. In turn, if it holds and the situation quiet down, these levels here, give and take 1 or 2%, could be a decent deep buy. But I'm going to be really cautious with that one. On silver, we've broken below the prior lows in the 2160s. There is, if you take that, if you put a fib on there, this 2021 move, Ryan, we'll see that the 61.8 is around 2090. I'm closely watching that one. I've got like really tiny leftover from already running a couple of years now. And there is this, around the 2090s, as we can see. And that's my next measure point. I may try to add a little bit to my tiny longs, but if the economic data would turn down south from here, I wouldn't really be surprised if we see like quite of a flush out, because silver being a much more industrial metal, there's a risk that if economic sentiment turns down, it might take another hit back into those 118s. Which then in that case, if that would happen, then I'm really going to load up on silver again. For the time being, watching
and waiting. Right, got a quick question here from Brian. Any thoughts on sterling Swissy? Not one I've looked at for quite some time, but we are looking to be sitting around support. I don't even know if I've got it on my charts here. Let's have a look. Let's bring it up for you. Let's take one. So we've got a bit of support lining up here. Around about this sort of 121, 120.80 area. You know, you can probably call it, you know, as I say, up to 121. So you're sitting on support here. If you match it off against cable, we've obviously got the big 120 in focus now that we're down here. Swissy pairs have been doing okay of late, but they're on the risk off bandwagon at the moment. Sort of following yen, we've seen a decent drop in Euro Swiss and the like. It depends what you're looking at here, Brian. You know, I can give you my thoughts that we're just, you know, the trend is obviously edging down. We're sitting on support. Obviously, it's following what's happening in the UK, obviously with the Brexit mess and everything going on there. So perhaps if you want to expand what you're looking at, what you're looking to do, what your ideas are, then we can look into that a bit more deeper. As I say, this is not one I look at that often, so I haven't got any huge analysis for it. But as I say, with this show, with this webinar, you know, I want to know what you guys are looking at. I want to get inside your heads. So, you know, you say you want to try and catch along there. Well, there's your level. If you're under sort of 120.70, you're potentially long. You're potentially wrong. So it's really how you want to set the trade up. What's your time frame? You're looking at long term. You're looking just to sort of scout the level. And if that's the case, you know, you just do your chart analysis. You know, find where your levels are. If you've got several levels, give them a little rating. Rate them in strength. Which ones would you have more conviction over than others? But just taking the pure simple, looking at where the support is, it's looking around that 121, 120.70 area. So that's where you want to lean on. And as I say, if it gets under that, you're potentially wrong. So make sure you know where your stock's going to be and your risk and how much you're prepared to lose on that. But obviously keep an eye on what the other pound pairs are doing. You know, we're really, let's look at cable. We're really undone everything now. You know, this is broken in so many different ways now. We've gone through the fib from the bounce from the virus lows. You know, this is potentially heading all the way to 120. That's going to be the big psychological level, if not technical level, as it tends to be. I'll potentially be looking at a scalp off the big figure if we have a test there, because we haven't been there for a long while, and I do like a big fat round number. So I'll probably be looking at a scalp there, but in the meantime, I'm really not interested in touching cable at all. It's just a bit of a mess. Right, so Dom, is there any scenario with the Fed versus QT? Where's it gone? With the Fed versus QT, maybe even do QE while hiking? I don't know. I don't think they will. That would be a huge reversal after setting out the path, and that's really going to take a big turnaround in the economy. And I don't think we're anywhere close to that yet. It could be that they maybe I wouldn't say reverse, but maybe they slow QT. Could they add to QE? I don't think they want to be doing that. They want to be reducing the balance sheet. They want to be building up the ammo supplies for the next time when they really have to change policy. But what we've got with these guys is that we're obviously trying to move. They're trying to move to a period of normalization. Okay, they're going to be fighting inflation, but they want to get to a place where rates are settled, prices are settled, the economy is settled, and then all they're doing with monetary policy is doing small moves here and there just to nurse things along. They don't want to be switching from one extreme to another. They don't want to be going from a rate hike cycle to a cut and QE cycle, because then they've just lost control of the whole thing. They probably have lost control of the whole thing, but that's not where central banks are going to be. But it's all going to be on how the economy performs. If the economy collapses, then yeah, they're going to start reversing their hawkish tones to more neutral and then to dovish, depending on how bad it gets. I still don't believe that the US economy is going to suffer greatly over the short term or medium term. I think it's going to be able to ride out hikes probably to about 2, maybe 3%, when potentially we see the Fed pause. And then we see what happens from there. Yeah, we might see some weakness, we might see some impact, but I'm not going to get sucked into the doom and gloom merchants and the narratives that will come that the US is on the edge of a collapsing economy, fire and brimstone and the end of the world. When you get people talking like that, I usually lop off about 20-30% of what they say, and that's my middle ground. So yeah, we may see some weakness in the economy, but we have to see how it performs. Mild weakness isn't the same as a complete collapse. And we've had the negative growth print from Q1. I don't even think another negative growth print potentially does any damage, bar looking at a technical recession. For me, as I mentioned before, while the demand is still there in the US, and it is still strong in the US, demand for produce, demand for products, while the demand is still there, while the consumer demand is still there, it's just a balancing act between what people can actually produce and get out, and what they can't, and they're waiting to do so. So again, it falls down to the supply chain issue. I feel that's going to be the same for the UK as well.
Ryan, can I just interject something? Because the technical question about doing QE while hiking rates, it's virtually impossible. It's doing the opposite things, and that is virtually impossible. Or cutting while they do QT, no way.
Yeah, exactly, because they basically will be selling or buying from themselves. You can't sell your assets while you're buying the assets. So yeah, exactly right. But even from that point of view, as I say, it's not something they're going to consider, because that's not the place they are at the moment. They're on a hike path, or on a tightening path.
But I was just replying
path, as they say, to normalization, and that's where we're at.
A no-go.
Yeah. So let's have a look. Any other questions you guys and girls have got? Just looking around, as I say, a bit of a messy morning this morning, so I'm not really up on the heavy news that's going on. Just scrubbing around my own trading. So yeah, unless we've got anything else, we'll call that a session for today. See what the PPI data brings us later on. I've not seen too many Fed speakers or any Fed speakers on the agenda today, but the official agenda, but that doesn't stop anyone popping up on TV and the press. Dom, just a quick question on euro dollar at the 103.40 level. That's the next big level, in my opinion. The break of 105 now targets that low down there. If we get through that, then we're going to be banging on about parity. The market loves to talk about parity. But yeah, it's a bit of a potential trapdoor if you get through that area for the long term, and perhaps we will see parity. But let's worry about that when we get down there. It's a potential point that I'll maybe try long just to test the level. Nothing fancy. See what happens. So yeah, thank you very much for attending. Thanks for coming. As I say, please give us your input, any ideas, anything you want to talk about. We'll get those on board. And thank you very much. See you back in the room or on the Face webinar, and have a good day. See you tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.